Welcome, my name is Brian Kaplan, I'm editor of The Banker, and we're launching the 12th annual World Payments Report brought to you by Capgemini, and for the first time this year, BNP Paribas. I'm with Jean-Francois Denis, who's the Deputy Global Head of Cash Management for BNP Paribas, and Christophe Vergne, who's the Payments Leader for Capgemini's Financial Services. Now, Christophe, in the Payments Report, we always have a lot of numbers that look at the trends in non-cash payments. So what do the numbers tell us this year?
So just remember one number for this year, Brian, is the unprecedented growth we have experienced in 2015 with 10.1% globally.
Okay, that's the first time in double figures.
First time since we published the report, a two-digit growth number at global scale, fueled, of course, by emerging countries, and especially with China experiencing 45% year on year, but also mature economies doing very well with an average of 6%, way above GDP.
Okay, and what about some of the mature markets like the UK market? I mean, how much has contactless affected that market?
Yeah, all around the mature market as well as all around the globe, cards remain the leading instrument, still taking market share to other instruments, and especially check that is decreasing. In markets like UK, which is interesting due to faster payment, there is still a strong growth of all instruments, including cards. So immediate payment or faster payment, illustrated from UK, is bringing energy and innovation into the market, benefiting all instruments, of course, except checks.
So, Jean-Francois, when you hear about these trends in growth in non-cash payments from a bank's point of view, I mean, you know, how can you capitalize on this change in the industry?
Well, the growth means that the cake is bigger and bigger, in fact. It also means that there is an opportunity to basically launch new instruments. And we all know that there is pretty much a lot of discussions around instant payment and how to get there. I think the growth means there is space to basically do something with piece of the cake, I would say, to launch a number of these instruments. It will not eat up everything, and not in one day for sure. So this is definitely a way we can move forward.
Are all regulations the same, or are they falling into different pots?
It's clearly a big challenge in terms of numbers of regulation, in terms of countries it applies to. And the additional complexity of it is that many of these regulations do not tell you exactly what to do, but leave rooms for interpretation because their aim is to be transformational. So this means the application and the real application, the real life application of the regulation will make different implementation flavors. So this is why a big part of the regulation are transformational and do not tell everything about how to do it.
Right, and this is a big contrast with America, because in America, you know, the innovation is left to the market, but in the European countries, it's actually using regulation to drive the innovation forward.
Absolutely. At least for those innovation that tries to shape a little bit the market or reshape the market, of course. There are, next to that, a number of regulation which are very detailed in terms of how to implement it. Even in Europe, when you take the PSD2, which has a big chunk of transformational aspect to it, they also tackle the so-called one leg out, one leg type of payments, where it is very clear what you need to do. So it's a mixture of both, in fact.
I mean, what have been the changes in corporate expectations about what they want from their banks?
There is limited change in the fundamental requirements of corporates. It's about managing transactions, managing liquidity, and managing risk. What's new in corporate requirements is that they are expecting the digital revolution they are experiencing as a private consumer also to come to their business environment. And they are expecting banks to accelerate the digitalization, especially of the support functions. Payments are digital already.
So, Jean-Francois, I mean, are you noticing much change in the demands that corporate treasurers are making of the banks?
We tend to think a corporate treasurer, because it's tangible, the way to describe it uses an e-banking portal like a consumer does. They do partly, of course, but they very much use file transfer, in fact, being for their payment or their reporting. And this is by definition fully digitalized, right? Now, what is really a big area of improvement, because it's a big area of cost, it's a big area where it's an area where we have a lot of delays in terms of execution. It's all these supportive processes. And this is typically what they are asking for, be it on due diligence, KYC, be it on account administration, about fraud detection and things like that. This is not the payment and reporting traditional interaction with the bank. It is really this supportive function, and there is a huge work to do.
And this has been an opportunity for the banks, isn't it? Because so instead of just providing a basic service, you can now provide value-added services, data and analytics, which can help the corporate, with their business plan.
There are two parts in these supportive processes. Part of it is the basics. I mean, account administration and helping the customer to automate that part and not having cumbersome processes. This is really fixing basics still. On top of that, indeed, we can think about data analytics and benchmarking typically, and that type of data and sharing of information basically that we can provide to corporate clients, which is another area of improvement for sure.
So Jean-Francois, I mean, how do you see the role of the bank in this new world where you've got the corporate on one side making bigger demands, and then you've got fintechs on the other side offering these high-tech solutions? I mean, how does the bank maintain its position?
We strongly believe in co-development in general. And it means not only co-development with fintechs, but it means co-development with, of course, clients, with other banks. Swift GPI is a good example of that. I mean, it's still a good platform, Swift, to collaborate, in fact. And of course, collaboration with non-bank players.
So we heard there how much the bank will stay at the center of things, even with the disruption that's going on in the market from fintechs. We've been discussing the 12th Annual World Payments Report brought to you by Capgemini, and for the first time BNP Paribas. My name is Brian Kaplan, editor of The Banker.
People matter, results count.